Good day traders, this is Stefanos on behalf of tixee, and in today's video we'll be giving a look back of the market for the week of the 4th of April until the 8th. Now before we dive into the webinar, listing some of the key highlights we'll be discussing are going to be Baidu's steep drop during the week and Twitter's surge after Elon Musk acquired a 9.1% stake, becoming its biggest single shareholder. As always, please note that all of the ideas discussed in the webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. Now kicking things off with stocks, as we mentioned during the intro, we had Baidu and Twitter making some significant moves during the week. Pulled up in front of me, I have the chart of Baidu. As we can see, throughout the week, we had a pretty significant drop. Now overall, the share prices fell by 8% or $11 per share on the week. Now the drop came after the news we had that the US Securities and Exchange Commission mentioned that it would be putting Baidu on a list of foreign companies at risk of being delisted from the US stock markets. Now the delisting warning came under the provisions of federal legislation, which means that foreign companies will need to provide more extensive financial reporting as well as disclosure agreement requirements. While Baidu, they did issue a statement showing their willingness to comply with US legislations, the news could impact its share price significantly in the coming weeks. In my opinion, it also depends how lenient or accepting the US lawmakers are going to be. However, I suspect they're not really going to be making any exceptions or becoming a little bit more lenient, because obviously all these laws would apply not just to Baidu, but to other foreign companies that are listed in the US stock exchanges as well. So yeah, these were the moves with regards to Baidu. We can also see that it pretty much erased, I'd say, 1/3 of the gains that it made from about 3 weeks ago. So you can see the kind of impact that the news had on the stock's share price. Now the next one is going to be Twitter. Now the company's share price surged by 18.43% or $7.14 on the week after it was announced that Tesla CEO Elon Musk had acquired a 9.1% stake of the company. Now this kind of percentage, when we're talking about Twitter as well, it basically equates to 73.5 million shares. So it basically made Elon Musk the company's biggest shareholder. Now, moreover, the company, they announced that they would be appointing Musk to its board of directors, which they later did during the week as well. Twitter CEO also mentioned that this decision, appointing Elon Musk to his board of directors, was the right move, as it became clear to them that Elon would be bringing great value to their board. As we also know, Elon Musk is a pretty avid user of Twitter with almost 81 million followers. Moreover, I think it was 1 or 2 days after the announcement came about, Twitter was pretty quick, Elon Musk was pretty quick to start making moves with regards to any features, upcoming features to the app of Twitter. He basically made a poll on Twitter, which basically asked he asked his followers if they would be looking for an addition of an edit button when it came to basically their users making their tweets. Now, the majority of the followers who actually voted on the poll, they said that they would like to see an edit button being included on tweets. And Elon Musk, obviously, and Twitter made the announcement a few days later that they would actually be looking to include the edit button in the upcoming updates. So you can see the kind of impact that Elon Musk is already having on the app itself. So we could essentially see the stock price of Twitter rising in the coming weeks. Of course, this was a pretty overextended move, I'd say, after the news were released. So we could see a slight retracement, maybe closing the gap that was formed here before we can see some further move to the upside, or whether prices wants to first retest the lows down here. Nevertheless, the impact is pretty clear. As we can see from the candlestick now, even though it's red and it closed red on the week, we also have to factor in the gap up that it made from last week, which again, it meant that the prices rose by close to 20%. And yeah, this is with regards to Twitter. And you can also see it's pretty much trading around about $46. It's pretty down from the overall highs that were formed right up here, which was at about $80. So it has some pretty good room for upside. Now, moving on to Forex, the US dollar actually had a pretty strong week. Now, the catalyst for the move most likely was the soon-to-be Vice Fed chairman's comments, who emphasized on the significance of reducing inflation, which currently sits at 7.9% for the US. Now, this is a good opportunity to reference the usual benchmark with economies which tend to target a 2% inflation rate, which is being deemed as a healthy rate. So we can understand why investors were keen to react on Maynard's comments during the FOMC meeting minutes. Overall, on the week, the dollar index rose by 1.31%, and we saw the euro dollar dropping by 1.57% with the candlestick here, or 173 pips. And meanwhile, the pound dollar also fell by 0.6%, or 78.8 pips. So you can see the move wasn't as significant as the euro dollar, but there was still a pretty healthy range with trading opportunities to be found, as we're currently retesting the lows from about 2.5 weeks ago. And lastly, we're going to be moving on to commodities. Now, both oil and gold, they hardly made any significant moves throughout the week. If we look at gold first, we'll basically see that it's been stuck in a range for the past couple of weeks. I think from memory it was since the 30th of March, if I switch now on the daily time frame. I mean, we have this mini range right here, but if we zoom out a bit, we can see that the range pretty much starts all the way from back here, which is the 15th of March. So the 15th of March is when we started forming this range that we're currently stuck in, which is basically between the $1,900 mark, which acts as a round number as well. And it's the bottom of the range, and then the top of the range, which is $1,966. Now, if we zoom in a bit further, the mini range that I was talking about started forming on the 29th of March, which you can see we're pretty much about to start retesting now the top of that range. If we have a breakout, it could be quite a strong one, but of course it's important not to forget the highs up here from where prices dropped significantly now a couple of weeks ago, and the same applies for the downside in case it breaks down. On the downside, I will also have the lows up here, down here, as well as we set the $1,900 mark as the round number where price could find some key resistance. So one, we had, if let's not forget the fact that we had a strengthening dollar throughout the week. So one would expect that this would pressure gold prices lower. However, let's not forget we also still have the ongoing conflict between Russia and Ukraine, which likely keeps some investors more risk averse. While we did have reports of Russian forces withdrawing from the capital of Kyiv, this is hardly a sign of the war coming to a close, as they could simply be refocusing forces to the southern front. Overall, on the week, again, if we switch on the weekly time frame, we see that prices, they did rise, but only hardly, as they rose by 0.89% on the week. A similar picture was also painted with oil as well. So you can see from the weekly time frame itself that the price has hardly moved. We have the candle body right here, which is barely a body. If we look, have to zoom in a little bit further just to see it clearly forming. Now on the week, oil prices only dropped by 1.17% or $1.19. The key highlights were the oil inventories, which showed a build in supplies by 2.4 million barrels, and which pushed oil prices lower on that day. Let's remember that the oil inventory report is released on Wednesdays, which is the candlestick right here. And like we said, the report showed a build-up in supplies, which is also why we can see the pretty steep drop, which actually was 2.76%. It was even bigger by the overall move that prices made during the week. So you can see the impact that report can sometimes have on oil prices itself. And yeah, there you have it. This as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.